There are approximately 23.8 to 25.4 million millionaires in the United States, representing about 7% to 9.7% of the US population. This accounts for nearly 40% of all millionaires globally. It really makes you wonder, how did over 20-something million people in this country obtain that level of wealth? They can't all be doctors, lawyers, athletes, entertainers, and influencers, can they? Not to mention, within that number of millionaires, there are the 989 billionaires also. For the average person that is just working and trying to make it, having even 500,000 to your name seems almost unobtainable. And depending on your age, you may feel as if you're just lagging behind your peers and contemporaries because of your low net worth. But it's not as difficult or impossible as you may think it is to grow it. The word you want to familiarize yourself with is assets, and I'll help you with that today. How's it going, everybody? I'm Remarkable Investor, back again giving you a video on net worth and assets, how they work, what they are, and how you can grow them. It's a very simple, straightforward video, and I hope you learned something that you didn't know beforehand. Without further ado, let's get started. Let's start with assets first. Assets, at least in terms of finances are concerned, are anything of monetary or economic value that you own or control. They can be physical, like a house or car, or intangible, like a patent or brand reputation. They are used to generate income, provide future benefits, or be converted into cash. We're only going to go over physical assets in this video though. Other popular asset examples include stocks, bonds, retirement accounts, precious metals, collectibles, and art. Physical money like cash and savings accounts are assets also, though it's not the first thing people jump to when the topic is discussed. So to sum it up, if you believe any items in your possession can appreciate or depreciate in value and can be used monetarily, you have assets. We've established what assets are and the use of them. But why is it important to have them, and which is the most important? The initial response would be,
well, if you said that cash and savings accounts are themselves assets, that would obviously be the most important one.
It may seem that way, but hear me out on why that's not entirely the case. First of all, let's figure out why asset ownership is very important for building and keeping wealth. People that build up the number of assets they have typically are trying to diversify their portfolios and are also trying to lessen the amount of physical cash they have. Now, why is that? It is because of the weakening of the US dollar, and depending on what assets you may have, they retain or hold their value compared to the US dollar. Now you may ask, what do I mean by that? And that's a good question. I think we are all familiar with the term inflation. And in case you aren't, inflation is a gradual loss of purchasing power that is reflected in a broad rise in prices for goods and services over time. And America has been dealing with inflation for a while, but in modern times, it has been very significant. With the creation of the Federal Reserve in 1913, which is a whole other video in and of itself, gold possession being criminalized in 1933, and the end of the US being on the gold standard in 1971, the value of the dollar has been dropping for decades. And with our dollar not being backed by anything tangible, like gold, it led to the quote-unquote money printing by the Federal Reserve, which is the central bank of the United States. This in turn has made inflation in this country a persistent issue for the better part of 100 years. So let's look at some examples of the value of certain products and assets from some of those key years. The average home price in America in 1913 was less than $10,000. In 1971, around $25,000. And today it is around $420,000. New cars in 1913 were around $500. 1971 around $4,000, and today over $40,000. Let's do one more. College tuition per year was $150 in 1913, $2,900 in 1971, and the prices vary today, but private universities can be as high as $45,000 in 2026. Now, I'm aware of the quality and capabilities of the items we have nowadays compared to back then. I'm just showing the nominal value of these things and how drastic of a change it is. I'm not saying that you should get rid of all your cash right after you're done watching this video. We need money to operate throughout daily life, but I'm giving you different avenues of growing your overall net worth, just to tie it back together. Now, let's look at how two specific assets I have stated earlier held up against inflation and the dollar losing value. First is gold, the shiny yellow metal that we all know and love. Let's start with 1913. An ounce of gold back then was around $20 and around $43 in 1971, right before we were taken off of the gold standard. Now here's where it gets crazy. The price of an ounce of gold as of June 2026 fluctuates around $4,500. Gold isn't the best asset in terms of traditional buy and flip investments are concerned, but it is a fantastic preserver of wealth because as inflation increases and the value of the dollar decreases, gold and other finite commodities retain their value, which, as you can see, is very impressive. The second asset we're going to look at is the stock market. Now I know, it's not the most exciting one you were probably thinking of, and it is using the US dollar, the same dollar that I just said was losing its value year by year. But hold on a second. If we just look at the entire stock market in terms of how much it returns, it's almost no contest compared to other assets. Over the last 100 years, the market has returned roughly 10 to 12% in gains annually. Besides real estate, which is an asset we'll get into shortly, the stock market is one of the best long-term strategies to become a millionaire. So yes, even though we are using a currency that gets printed a bunch every other year, it seems, on a consistent basis, the stock market is definitely a good choice for a solid asset. So which asset is the best option? It really doesn't matter which one you choose to go with. Just get started with any of them and you won't regret it. Since we've established what assets are and how they can be used to retain and grow your wealth, it's a good segue into the next part. Net worth is the total value of what you own or your assets minus the total amount of what you owe or your debt and liabilities. It's a pretty straightforward process, and most people know the term, but maybe not exactly what theirs is and how they stack up to other people in their age group. So let's go over the average net worth by age in this country first, and then the median. According to the website Empower, in 2026, the average net worth for people in their 20s is $139,243. In their 30s is $325,952. In their 40s is $750,578, and so on and so forth for the others. This is probably the numbers that you've researched when you wanted to see how you stacked up with others in your age group, and the result most likely was disheartening for you. But here's the issue. You looked up the average instead of the median. The average is the total number of participants added up and then divided by the amount of participants in said exercise. In net worth terms, all of the millionaire athletes, entertainers, influencers, actors, and others in their 20s are included in that list. So along with every other age group that was stated, it skews the number to the upside. So you shouldn't feel bad for not having over $100,000 right out of college. Instead, we'll look at the median net worth for all of those age groups now. People in their 20s is $6,600, 30s is $23,093, and in their 40s is $68,698. And you kind of get the picture. The median is by definition the middle. So you take the same number of participants, but you look at what or who is in the middle. And that's how we get the number. It's nothing wrong with looking at the average if you just want to be aware of it, but it shouldn't be the benchmark for you, especially if you're just starting out. Here's the thing when it comes to net worth in this country. A lot of that net worth is from homeowners or real estate. That's why in both examples we just went through, the number gets higher and higher the older the age groups get. For the average homeowner in America, 45 to 50% of their net worth is from the equity in their home, and the median net worth of said homeowners is around $400,000. So you have the home appreciating in value because of the housing market, and on top of that, the house getting paid down throughout the years. This is what most Americans have done to create and grow their net worth. But remember, just because someone has a net worth of $1 million, that doesn't mean that they can afford to travel around the world whenever they feel like it. They have assets that are worth $1 million, not $1 million in the bank. So, how much should your net worth be? Well, I know it's a cop-out answer, but it's whatever you think is good enough for you to live comfortably and enough for you to take care of your responsibilities. You now have the average and median net worth numbers for the United States, and you can compete against it or choose not to. It's up to you. At the end of the day, it's nothing wrong with comparing yourself to others, but only in a way of challenging or competing. In my opinion, it's healthy to aspire to become greater in something you are interested in. If you're not where you want to be at in the current moment in your life, don't be discouraged. Just lock in, focus, and get to work. Rome wasn't built in one day, and your financial success won't be either. Alright, that brings this video to a close. I hope you enjoyed it. If you wanted to check out other financial videos I talk about, different topics, feel free to look at this one or look at this one. And as always, I appreciate you guys listening, tuning into the videos I talk about. I'm Remarkable Investor back again. Have a good day.